And as we've been hearing, there's a lot of focus on what's playing out in the Forex markets. There's a question of how much further the euro will fall. It's currently at 123.97. Our next guest says it's going to fall to 115 by next year. He also says euro-dollar parity is definitely within the realm of possibility. Joining us with perspective is Alan Ruskin, Global Head of FX Strategy at RBS. He's with us now by phone. Tell me, what just happened within the past 30 minutes or so of trading, which seemingly pressure to the downside has continued on the euro-dollar?
Yeah, it's not entirely obvious. I mean, the euro's obviously been racked by specific euro risk-related problems, but what you're also seeing is a sort of more generalized risk sell-off, and that tends to help the US dollar versus a whole range of different currencies. So, you know, some of the innocent victims tend to be Canada, Brazil, Sweden, some of the so-called riskier or high beta currencies, and that movement from those currencies into the US dollar also tends to reinforce the US dollar's progress against the euro. So it's kind of coming through both angles, really. Generalized risk and then, you know, specific to the euro.
But what was the trigger here? Was it purely technical? Because what changed in terms of generalized risk concerns in the past 30 minutes?
Not totally obvious to me, to be honest, and I think this has been building in a way. We did see a little bit of squaring of short euro positions that has typically occurred on Fridays, in no small part because obviously there have been large euro positions built up during the week, and we've seen the last few Fridays people have actually squared up their positions. It's actually helped the euro. I think this time around there's a perception that, wait a minute, these guys have actually used up most of the ammunition last week. There's nothing more to show the markets as such, and the emperor has no clothes.
So yeah, if this was the you know, somewhat jokingly named shock and awe campaign, we've even got the Fed opening up a swap lines here. Is this concern about risk panic at this point? I mean, should we be seeing this degree of concern right now?
I don't know whether I'd call it panic. You know, I think the markets, certainly the currency markets, are still pretty orderly as such. There's no real disjunctures. There's, you know, a few gaps where you just have, you know, sort of a lack of liquidity as we had, you know, briefly last week.
Okay.
But you certainly don't get this change now in terms of Greek restructuring, and the sort of story on Greek restructuring is still out there, and as an overhang is a big, big problem.
All right, so bit of perspective, a little bit less panic out there. Thank you so much, Alan Ruskin, joining us, talking to us about the sell-off in the euro that we've been seeing.